Thinking about asset allocation, right? Obviously, a lot going on in the world today. And why don't you give us a kind of a big picture view of kind of how you see the world and what you guys are thinking as far as asset allocation for your typical client.
Yeah, first half of the year versus second half of the year. Will it be
Yeah.
the same? Often isn't. Now we're in summer, so.
So let's take a big step back, right? We came into this year, growth was quite strong, barring a few hiccups like the government shutdown at the end of last year. You had that give back at the beginning of the year. You had the tax refunds. We had a lot of tailwinds.
Yeah.
We are looking at the second half and saying, okay, which of those tailwinds go away? Tax refunds is the obvious one. The less obvious one to me is perhaps the Federal Reserve support of the market, the bill buying program that existed that really fueled liquidity to a meaningful degree. Now, even without that kind of a tailwind, you still have ample liquidity in the market, tons of money in money market funds. There is dry powder on the sidelines. We're not saying that liquidity dries up. We're just saying that maybe it's not as ample as it was in the first half of the year. And then finally, it's the AI CapEx story.
Yep.
There have been changing winds to the story coming into this year. October of last year was really the flashpoint where you started to see a little bit of a buyer's strike. Investors starting to say, well, okay, we are going to be paying more attention to companies that are spending and what ROI they get back in. Now, if you fast forward to this part of the year, that CapEx is coming at a cost. You're seeing a really ferocious amount of capital markets activity coming to the surface. And we think that will continue. We just think that it will have ramifications for how investors engage with the trade.
Yeah.